The marketing pitch for automated trading is intoxicating. You install a file, step away from your screens, and let a perfectly disciplined, emotionless algorithm extract profits from volatile markets 24 hours a day. The reality is much harsher. An algorithm executes exactly what it is programmed to do. If you leave a poorly vetted, unmonitored script running in a live market, it will drain your trading account with absolute mechanical efficiency. Deploying an expert advisor on MetaTrader 5 does not eliminate your workload, it simply relocates it. This is a concept known as the effort shift. This chart maps how your daily routine changes. You trade manual execution and chart watching for a new stress, system auditing, server maintenance, and rigorous risk oversight. You stop guessing market moves, becoming a portfolio manager supervising a team of automated employees. Approaching automation with the expectation of passive, zero-maintenance income guarantees failure. Adopting a strict, analytical risk manager mindset is the only actual path to surviving the modern Forex landscape. The most dangerous trap in automated trading sits right on the sales page. Almost every EA vendor sells their system using a historical backtest. To a beginner, a backtest looks like a guarantee. It displays years of data, showing the algorithm navigating past market environments with seemingly flawless entries and massive hypothetical profits. But those reports often hide a fatal flaw called over-optimization or curve fitting. Developers tweak the algorithm's parameters until it perfectly matches the historical data. This chart shows exactly what happens to a curve-fitted system. By memorizing the past, the algorithm is completely blind to future shocks. If the market shifts into a choppy, ranging environment, the heavily optimized system breaks immediately. Relying solely on a historical profit graph introduces massive hidden risk. Past performance offers absolutely zero shield against future market volatility. To properly evaluate an expert advisor, you have to ignore the peak profit projections and focus entirely on the system's ability to survive its inevitable losing streaks. This scorecard matrix lays out the baseline for safety, starting with maximum drawdown, the peak-to-trough decline, capped under 20%. Next is profit factor, requiring a ratio above 1.5. Finally, the recovery factor measures how quickly the algorithm bounces back after a hit. Yet even the best mathematical metrics are still theoretical. Before risking any real capital, the system requires live forward testing for a minimum of 1 to 3 months. You run the algorithm on a demo account in real-time market conditions. You observe how it handles sudden, unexpected news events, sudden spread widening, and actual execution delays. Forcing an EA through these strict survival metrics in a live environment exposes the fragile algorithms that only work on paper, protecting your primary capital from catastrophic failure. Once you know how to vet a strategy, you face the main dilemma of the MT5 marketplace, navigating the endless ocean of free form downloads versus investing in premium software. Free EAs carry severe operational trade-offs. They are frequently built on outdated logic, lack ongoing developer support, and fail to adapt when macroeconomic conditions shift. This matrix table compares the actual value of a premium EA. A paid tool justifies its price tag by providing dedicated technical support, continuous logic updates to match evolving markets, and advanced safety features like automated news filters. However, purchasing a paid EA requires a larger starting capital base. If you spend $500 on software, applying it to a $200 account makes the fixed cost mathematically impossible to recoup. Relying on free automation costs your entire account balance, while investing in premium tools buys the continuous market adaptability required to stay profitable long-term. Even if you acquire a perfectly coded, highly adaptable algorithm, it will still die if you deploy it in a weak technical environment. Running an automated system from a home computer introduces immediate physical risks. Things like a sudden power outage, a dropped internet connection, or an unexpected system update can leave positions completely unmanaged. The mandatory solution is renting a virtual private server, or VPS. This remote server runs 24/7, ensuring your algorithms remain constantly online. This schematic illustrates the final, critical piece of the infrastructure, the broker. An EA requires an ultra-low latency connection and access to raw 0.0 pip spreads to execute exactly when the logic dictates. High transaction costs or execution slippage mathematically destroy the tight profit margins of scalping algorithms. A delay of a few milliseconds can turn a winning signal into a losing trade. Securing institutional-grade infrastructure, specifically a VPS and an ultra-low latency broker, is a strict technical prerequisite. Without it, algorithmic logic simply bleeds out through connectivity drops and poor execution. With the technical foundation built, the actual daily reality of an automated trader involves a mandatory 15-minute check-in. You review the server logs, verify open positions, and ensure the EA is behaving within its historical parameters. Every 3 to 6 months, the system requires strategic reoptimization. You update the parameters using recent data to ensure the logic aligns with current market volatility and liquidity levels. Most importantly, you need a definitive manual intervention plan. If a major, unpredicted global event shocks the currency markets, you must know exactly when and how to hit the kill switch, closing all positions and disabling the software. You also mitigate risk by expanding. Relying on a single algorithm creates single-point failure. Building a diversified portfolio of contrasting strategies, pairing a trend follower with a mean reversion bot, stabilizes your overall equity curve. Constant human supervision, regular parameter tuning, and a hard exit strategy are the specific barriers standing between algorithmic efficiency and a total loss of capital. This decision tree outlines the final test. Looking for passive income without checking screens? If yes, avoid Expert Advisors entirely. If willing to work, you face 2 initial gates. Do you have sufficient capital? And will you patiently forward test on a demo account? If yes, you hit the technical gate, securing a VPS and ultra-low spread broker. Clearing that final requirement brings you to deployment. You are ready to supervise a diversified portfolio. Anyone hoping to blindly trust a robot while running high-frequency trading strategies over a standard home Wi-Fi connection is setting their capital on fire. True automated trading is not an escape from the markets. It requires elevating yourself to the role of a highly disciplined, infrastructure-backed risk manager.